So who are the investors? Here in this presentation, we have three categories of investors: angel investors, private equity investors, and venture capital investors, venture capitalists. So these investors, in difference from the previous sources of funding that we discussed, they invest substantial amounts of money, but they expect you give them something in return, and most of the time it's in equity. And you will lose some control over a company because they will be involved in how this company progresses forward, but still laws and regulations will apply on these investments. So you basically need to hire a lawyer when you do investments like this. Who are angel investors? So these are the ones that probably maybe invest money into your startup on the pre-seed and seed level, because they like a very good deal very early that nobody knows about. And they also one of the cons that of the pros that they provide help to your startup, because they are very interested in getting a return on their investments. But they take a big chunk of equity. Usually it's 20 to 40% of the equity you can lose, and with the medium amounts of money, about $50,000, maybe $100,000. But this is the max that you can expect from the angel investor. And since angel investor also takes your equity and will be involved in your startup, so you're using some of the control over your startup. And also you will be pressured for the fast returns, because of course they would like to realize their gains, and the only way they can realize when you sell your company. So you will be pressured to do that. So who are the angel investors? They are high net worth individuals. Most likely they already also built their companies themselves and sold, and they seek for the high return. So they do put money that they hardly earn. They earn hard and make money on them very fast. So, and they invest their own money into it. Private equity. This is something that it doesn't apply to the startup, because private equity companies, they buy mature companies, not startups, and they make a big investments. They buy entire company with goal to resell it. So after they streamline all the operations, to resell and make a profit on the company, and they maintain full control. This is something that not really apply to the startup, but I would like you to actually know about this option if on the later stages you are thinking of selling your company. Venture capital. So venture capitals, usually they invest on the later stages of the startup, when you already have a user base and you have proven revenue that coming in, or you're really great unicorn. So that's because venture capitalists, they don't like a high risk, not like an angel investors. They would like more deal, that's for sure. And they also provide you help, take out a significant chunk of an equity, about 20%, and you will lose some of the control and will be pressed for the faster returns, of course. And these venture capitalists, they invest a larger amounts. So you can expect something like up to 10 million, so maybe even a little bit more. They invest, they do very well their research, and then they invest in only high potential startups and only technology startups. So far we went through three groups of investors. It's angel investors, private equity, and venture capital.